At the half-year mark, the capital markets report shows a significant improvement in both the bond and securities market. Trade in government papers rose by 216% from 10.8 billion in 2024 to 34 billion currently, thanks to retail investors.
In half year 2024 only stood at 10.8 billion, but turnover today stands at 34.23 billion, which is a 216% increment year on year. And if you look at the total turnover during the course of 2025, that stood at 35.6%. So showing you that the initiative of the retail investors participating in the bond market has more than doubled and now has leveled out to where the total turnover was in the bond market last year.
On the stock market, Bank of Baroda, Uganda and Stanbic Bank dominated the trading with 52% and 23.4% respectively, while MTN stock gained the most at 53%.
And if you cut across the different counters, you see MTN is up 53.6%, Quality Chemicals is up 61%, Stanbic Holdings is up 28%. There are some counters that are down, including NIC, 7% down, and New Vision is relatively flat, and UCL is at 45% drop in its price year on year, with UMEME down a moderate 10% year on year.
Meanwhile, the Edala platform, a minibus for SMEs, has also grown in numbers, and according to Paul Buiso, at least 4 companies will be graduating to the main exchange by the end of the year.
So far, we have about 4 potential companies. One of the companies has been able to graduate to the market and is in the process of issuing a bond. You get that information in due course when they go through the relevant regulatory approvals. And we believe that we are on the right track with this because business owners, directors are getting a better understanding of the capital markets and what needs to be undertaken in terms of disclosure-based capital.
During the year, Uganda's credit ratings were downgraded by Fitch to B, which rocked investor confidence. Now the Capital Markets Authority says its time ratings are done by local companies that understand the market.
But for us, it's important to have these rating agencies locally because they appreciate the local environment. And therefore, when they give that rating, they will have taken into consideration all the factors, including the state of the economy and all the other things that are local to Uganda, and since you're investing within the Ugandan space. There are so many international rating agencies, but sometimes they miss that local aspect.
Joan Salmon, NTV Business.